Here to show up first before I get started. So now I'm live both on Instagram and on YouTube. So thank you for joining me. This is our Friday live, and our goal is always to bring you information, knowledge. Being that it's Financial Literacy Month, I thought it would be perfect to cover how to use your RRSPs to save for today and for your first home. So to save today and use it, and not just for your future, but you can absolutely, obviously, put it back in over time to use for your future. And so, welcome everyone to today's live session as we continue to celebrate Financial Literacy Month. I hope you were able to join us on our Earn While You Sleep passive investment that we had about a week ago. And that was phenomenal. We had 3 experts who spoke to different ways that you can invest in real estate passively and earn an income either today or in the future. And so today we're talking about how you can use your RRSPs to help you build for today and not just for the future, because not everyone wants to think about the future, even though the future is important. It's still really important that we get on track with what we need for ourselves to have the type of life that we want. And so I think in general, it's really important for us to build and think about home ownership, because it's being that it's one of the largest assets that you'll or one of the largest purchases you'll ever make, and hopefully you'll make it an asset producing purchase so that it can help provide wealth for you both today and well into the future, and maybe for generations to come if you're able to pass it on to your children. So I'm going to dive right into the topic of what I think is a really, really important part of your financial journey. And I know I used RRSPs to help myself and my husband build together when we were buying our first property. And so it is absolutely an excellent tool that you can use to save, not just for your future, which is important, but also to use it today. And so I'm Andrea. You've probably joined me before, either on my Instagram Live, my YouTube, or Facebook. Any of those platforms you can find me. I'm also on LinkedIn. And what I do is help individuals and families build and think about their financial futures. And it's not just about today. I think today's important, but it's also about tomorrow and the legacy that you may want to build. And so today we're going to talk about something that you could be using as a strategy to get on track to homeownership, and that's using your RRSPs. And so that's RRSPs means your registered retirement savings plans. And I know that some of you may be using them already, but you may not know that you can use them as a tool to buy a home and as a tool to save for retirement. It can also be used for education. That is one of the uses of it. And I'm not speaking to that today. We're going to focus on how to use it for home ownership. And so, what is an RRSP? What is it? Have you ever thought about what an RRSP is and how you can utilize it? Well, if you're not familiar, it is, as I said, a registered retirement savings plan, and it is a taxed advantage account that you can create. And it's really designed for Canadians to save for retirement. If you're in the US, typically you have access to other tools or other strategies that are similar. Okay. And so I definitely want to make sure that you understand that it is a tool that you can use. It is a way to save, and it's one of the best ways that you can use today to not just save for the future, but to save for today and accomplish your real estate goals of homeownership, right? And so it's if you don't realize it, it's not only just to use for the future. It is a powerful tool for achieving your financial goals today as well as the future. So you can use it to help you build your first home and purchase your first home today, as well as build your retirement savings plans. So some of the key benefits of a registered retirement savings plans is the amazing tax deduction that it provides. Okay, so if you're looking for, especially if you're employed, Many of us that are self-employed, like myself, an entrepreneur, we have many deductions because a lot of our expenses for our car, our business, and just our running our lifestyle with around our business, such as meetings and travel. A lot of that is tax deductible. But when you're an employee, you don't have a lot of strategies. If you have children, you can have access to using some of the things that you spend on children, such as daycare or putting them in activities. Those are deductible if you are a parent. But the major one for people that are not parents and your employee is tax deductible methods like the RRSPs, or if you're saving at your work in a deferred profit sharing plan or a locked in retirement account, those all provide tax deductions. And so it's one of the most important benefits is that it can provide this tax deduction. So, yesterday, 2 days ago, I was talking to my daughter about her taxes that she pays. She was like, it's so alarming how much I pay in taxes. And I'm like, yes, for anyone that is employed, you do pay a lot, unless you find strategies to get some of that back. And one of the strategy is to use the RRSP, which I told her you might want to reach out to our accountant. I said to her, connect with our accountant to find out how and what you need to do to help you get a nice rebate like you did last year, or at least to break even and pay nothing more to the government, right? And so the RRSP is just that tool. And you have all the way till the end of this year and the first 60 days of 2025 or the following year to help put into your RRSP and get the deductions for the tax year that you're trying to, like for example, 2024 tax year, you have all the way up until the first 60 days of 2025 to put into the RRSP to get that tax deduction. And so if you don't understand, and a lot of what I'm saying sounds foreign and Greek, don't worry, reach out to me and I can connect you with experts that can help you get on track to use your RRSP to save both for the future as well as for today. If you want to buy a home, you can save for today and get that tax deduction and use it, as I'm going to explain soon. Okay, so the example of the big deduction and why you want to use it is if you were to contribute $5,000 into your RRSP, you can use that as tax to reduce your taxable income. Okay. And it's based on your tax rate. So depending on your tax bracket, depending on, how much income you've earned from all sources, it will help you reduce your taxes. So I don't know if it's easier to use, simple round numbers. If you, which I know nobody has, it's probably unless they don't work and generate much income. But if you had a tax rate of 10%, then it would be like 10% of 5,000, which means that, $500 of that would be received back in, as a rebate, possibly more, depending on your, for each increment. You look at it at 20%, it becomes 1,000. At 30%, it becomes, 3,000, right? And so think about, um, just think about what your tax rate is. If you're in a 50% tax bracket, it happens, many of us are, then you're going to essentially be able to get back a nice chunk, or at least bring your tax rate down and possibly owe the government nothing additionally. Okay, so just excellent way. I love it. I've used it for myself and my husband. We've used it. I've showed many clients how to use it. That is the RRSP as a tax deductible strategy and a method to save and invest for first time buyers or your first home purchase. Okay, so using your RRSP means that you're not taking it out of the RRSP, you're actually moving it into what's called a home buyer's plan. And that home buyer's plan, the HBP, is it's just a set of paperwork that you fill out the paperwork and let the government know, CRA know what, Canada Revenue Agency know what it is that you're using the money for, and so that they don't tax the amount that you move out and use to purchase that first home. Okay, so you just to understand some numbers, if you are eligible as a first-time buyer, meaning that you haven't bought a home, or you've been out of the housing market for the last 5 years, then you can qualify as a first-time home buyer again. Or if you've never bought, then you automatically qualify as a first-time home buyer, and you can use up to 35,000, which is fantastic. The number has increased over the years. You can use up to 35,000 for you, and if you have a spouse or partner, they can also use up to 35,000. So really, when you combine the two amounts, that's 70,000 that you can use of registered retirement savings contribution to buy your first home. And in Ontario, and especially the GTA, that 70,000 is going to be a substantial, number to help you get into homeownership. Because likely, even if you're qualifying at the 5% of the first 500,000, it's still a substantial amount when you look at 25,000. Typically, there's not many houses that you can buy for 500,000 or less, so you might need to qualify for something greater like 700 to a million, and any amounts greater than 500,000, just so that you do use the 10% on any amounts greater than 500,000. So 70,000 could come in very handy to help you get the down payment that you need, and as well the amounts that you need for closing costs and anything associated with that purchase. So 70,000 is pretty substantial. It may not be the full amount you need if you're buying at over $1 million, but it definitely is a huge number. Plus, you could take the tax deductible amounts that you like. If you got a deduction on your wages or your taxes, and it issues a rebate, that amount could be allocated towards your savings. It's part of what we did, my husband and I, Dean. It's part of what we did when we were saving for our first purchase together. Is we used each of the 2 years that we were saving to get the deduction through our taxes and add it to our savings. You can add it right back into the RRSP as long as you have enough time. You do have to have it in there for a 90-day window so that you can then take it out after that 90 days to use for your first purchase. But, either way, even if you don't put it into the RRSP, you can still have that money on hand to use for some of the associated expenses or towards the down payment or deposit that you make to set up that deal or construct a deal. So very, very important strategy if you are looking at a way to begin achieving first time homeownership or purchase. The RRSP can be that magical tool to help you get on track. So more about the home buyer's plan. So the home buyer's plan is, as I said, just a set of paperwork that you'll complete so that once you've established the RRSP, you've put in the 35,000 each, maybe if you have a spouse, then when you go to utilize it, remember it has to be in there for that 90-day window. And then after that, you can just complete the paperwork with the expert that you're working with will help you. And you can then withdraw the money from that RRSP into the home buyer's plan to make the first purchase. The great news is that there's no taxes applied to this withdrawal because you're using the home buyer's plan, and it's really recognized through CRA, the government, Canada Revenue Agency, as acceptable tool and an acceptable method to utilize your RRSP, your savings for retirement, to buy your first home with the intention that you're going to pay it back later. And that repayment process means that in each of the years after, so usually you get about a grace period of about a year after you withdraw it or so, before you're expected to start making the payments. And usually you're told what amount you have to pay back each year using your notice of assessment, your NOA. It will tell you on that document. And that document is just the one that you get each year when you file your taxes. You get the paperwork back from the government, and that paperwork is called your notice of assessment or your NOA. And it usually tells you on that document how much you're required to put back each year. And it's going to tell you for the year that you have it due. And as long as you meet the requirements, there's no penalties, there's no withdrawals applied to your tax, no taxable amount on your income each year. The amount that's withdrawn is just seen as part of your home buyer's plan. And as long as you're paying back the minimum required each year, then you are not being taxed additionally on that. If you don't pay the minimum that is required that year, it does get added to your income. And so it will be taxed accordingly, depending on your tax bracket. Okay. So when it comes to your RRSP contribution, the general rule is that you have 18% of your earned income is eligible to be put into a registered retirement savings plan. And they do have up to a maximum that you can put in. And the maximum annual limit is, as of 2024, is 30,780. So if you earn an income that is greater and it will bring in, an 18% of your income, say 35,000, you're only eligible up to the 30,780. Okay, so there are restrictions on how much you can put in. So that's the max, the limits that the CRA will allow any one company to allow you to put in. And if you ever by chance, which it's happened, I've had clients over contribute. If you over contribute, then you will be penalized if you don't take it out. So usually the institutions you're working with will notify you that you've over contributed and you just take it out so that you're not penalized, because the penalty is typically 1% per month on the over contributed amount. So don't over contribute. And if you do, and you make it erroneously because maybe you're putting away in multiple plans and they're not all, being calculated, just take out the extra and fix it so that you're only contributing to the limit that you're allowed. Do think about the person, for example, who has never contributed and has been working for years. That there's many of you out there that is that you've been contributing. You haven't been contributing to our RRSP, but you've been getting at the allocated contribution room. It doesn't go away. It accumulates indefinitely into the future so that you can use it at any time, any one year, so that if you ever come into a windfall, whether it's an inheritance or a lottery winning, you can use up that contribution room and help offset either previous tax years that you didn't use it and get back some of the taxes that you paid in those years. And you can go back typically you can go back as far as 3 years. So it's not indefinitely back, but it's indefinitely forward that you can carry forward the unused room. So I'm saying a lot and I'm giving you a lot of information. And so you definitely need to align with an expert, and we can help you find the necessary experts that can help you set up the RRSP and utilize your contribution room, both current and previous rooms, so that if you need to strategize and plan to go back, we can get experts to help you do that. So unused contribution room, typically for clients that I've ever seen, especially if they've been working for 5 years or more, it could be as much as 70, 80, 100,000 or more. Okay. And the document that helps you identify that unused room is your notice of assessment. That NOA is coming to you typically every year that you do file, and it will update you as to how much unused room you have, how much room you had in the current year, and it gives you the cumulative amount over the past X amount of years that you've been working and never used it. So a lot of information there. Let me just see if anyone has questions at any time, you can always ask your questions during these sessions. If you have questions after the session, you could just DM me or email me, Andrea at PW Wealth. So that's PWWEALTH. And we can advise and give you some direction as to how to make this happen for yourself. Okay. I do think this is one of the best strategies that you're offered as a Canadian, especially an employed Canadian, to utilize, one, the tax deductions, and two, to help begin saving in a tax deductible, you know, program or plan that gives you the opportunity to get money out and use it for your first purchase as a home buyer. So I do think that I just saw my accountant responding to my daughter, her question about how much should I be putting into my RRSPs this year to help me not pay taxes and possibly get a rebate. And I was giving her some guidance because I said to her, our accountant will know best based on the numbers that we give her, but I can also give you some generic advice based on my knowledge of your personal situation and my understanding of the registered retirement savings plan, as well as, over the years, I've helped clients utilize that strategy, both, as I said, to get the tax deductions and build for their retirement, as well as use it as that our retirement savings, use it for their first home purchase. So it's a lot. It's a lot that I've said, but let's begin start using those strategies outside of the registered retirement savings plan. You could be using as well if you're not too um, keen on using the RRSP. You can use a tax-free savings account. The tax-free savings account, or the TFSA, is also a strategy. It doesn't give you the tax deductions that the registered retirement savings plans and RSPs do, but it does give you income that can be earned in this vehicle, in the savings vehicle, that is tax deferred, which is also amazing. So you can use both, right? The only thing with the tax savings is that, or the one thing that is very different, is that if you pull the money out, you are not, being taxed on any of it, which is good, and you don't have to use a home buyer's plan to pull it out and use it for your first time home purchase. So there are some benefits if you want a consultation or an advice. I do offer an initial free consultation to give you some guidance, so that if you're looking to start planning and use this strategy, especially being that we're coming to the end of the year and the top of the new year, you might be starting to think about your taxes, start to think about, did I accomplish my goals this year? What do I need to do to get to realign my goals from this year for next year so that I get on track? It's possible. Many years I end the year and I had such big goals that I didn't accomplish everything, and all I have to do is readjust for the new year, that's 2025 coming, and see how I can use what I didn't accomplish this year and get to use them as goals for 2025 or the following year. So no worries if you didn't accomplish what you set out to do in 2024. There was a lot going on, a lot of challenges, and you can still try to do this in 2025 or 2026, because sometimes you need to get the goals and the planning set up and then get on track. And so it may take you a year or two to get to your desired goal. So I'd love to hear from you. I'd love to find out more about who's ever used this strategy, who thinks this is a great strategy to use. And so, share with me, send me a DM, send me some information about what you're doing or what you would like to do, and let me know. If you're already using the strategy or already using an RRSP, let me know. I'd love to hear more about it. On the last event that we had with Equiton on there and Laurel Ridge, as well as Noel, we talked about how you can use your LIRA's registered plans to help invest in strategies like Equiton's REITs, the Real Estate Investment Trust. And so if you're looking to put your money to work for you, the strategy of using a REIT is an excellent way to put your registered retirement savings plan to work for you. Or if you have at work, deferred profit sharing plan or a LIRA locked in retirement savings account or locked in retirement account, we can help you put those to work for you to get better returns, to get those 8, 10, 12, 20% returns that we speak of with the providers that we introduced you to. So, let me know by reaching out to me. I'm going to, this is going to be available to you on my Instagram and my YouTube. So, share in the comments and tell me what it is that you're already doing or what you need to know more about so that I can help you. Okay. Thanks, everyone. I forgot to say happy Friday. And I hope you all have a fantastic day, an amazing weekend. And I want to hear from all of you about this strategy and who's using it or who is wanting to use it so that we can get you all on track. We want 2024 to end well for you, and 2025 to be the year of financial success. And so reach out to us and connect with us so that we can help ensure your success in 2025. If you're not already following us on Facebook, please do start to follow me on my Facebook. Book that one-on-one. It's free, the initial consultation. And thank you everyone for joining me today for today's session on how to use your RRSPs to save for your future, your home, and start doing it today. Why wait until tomorrow when you can start today? Connect with me as soon as you can so that we can help you get on your journey to success and achieving your financial goals.